Tether's gold holdings hit $17 billion SARS, what it means for USDT-backed crypto cards. Tether, the company behind USDT, the world's largest stablecoin by market cap, reported over $10 billion in net profit for 2025 and revealed their reserves now include $17.4 billion in gold holdings. With USDT supply reaching $186.5 billion in circulation and a $6.3 billion excess reserve buffer, Tether's financial position has major implications for the millions of crypto cardholders who rely on USDT-backed spending solutions. The company is acquiring physical gold at approximately 2 tons per week, potentially exceeding $1 billion per month in purchases, while maintaining $122 billion in direct U.S. Treasury holdings. Tether reports $10 billion profit and 17.4 gold reserve position. On January 30, 2026, Tether released its 2025 financial report showing record profitability and a significantly diversified reserve portfolio. Key highlights: net profit, over $10 billion for 2025 USDT supply growth, increased by $50 billion, reaching $186.5 billion in circulation excess reserves, $6.3 billion buffer over liabilities. Gold holdings, $17.4 billion, up significantly from previous periods. Bitcoin holdings, $8.4 billion direct treasury holdings, $122 billion total treasury exposure, $141 billion, including overnight reverse repurchase agreements. Investment portfolio, $20 billion are separate from reserves. According to Bloomberg reporting, Tether is acquiring physical gold at approximately 2 tons per week, translating to potential monthly purchases exceeding $1 billion. This aggressive accumulation strategy positions Tether as one of the world's largest private gold buyers. CEO Paulo Arduino stated, "With USDT issuance at record levels, reserves exceeding liabilities by billions of dollars, treasury exposure at historic highs, and strong risk management, Tether enters 2026 with one of the strongest balance sheets of any global company." Tether also launched USAT, a newly regulated stablecoin designed for the U.S. market, in partnership with Anchorage Digital to establish compliant operations domestically. USDT backs most major crypto card spending solutions. USDT is the backbone of the crypto card ecosystem. Nearly every major crypto card that offers stablecoin spending options supports USDT, Crypto.com, Visa, Direct USDT Spending, Nexo Card, USDT as collateral for credit lines, Binance Card, USDT conversion at point of sale, Wirex, USDT balance spending, Revolut, USDT trading and spending. When Tether's reserves strengthen, it directly affects the safety and stability of these spending solutions. A stablecoin is only as stable as its backing, and USDT's backing now includes $122 billion in U.S. Treasuries, low-risk, liquid government debt, $17.4 billion in gold, inflation hedge, crisis-resistant, $8.4 billion in Bitcoin, asymmetric upside, speculative, and a $6.3 billion excess reserve safety buffer. For crypto card holders, this means USDT is less likely to depeg during volatility, reducing the risk of your spending power evaporating mid-transaction. Gold, treasuries, and the too-big-to-fail hedge nothing broke here. This is positive news. But the context matters. The Terra USD collapse shadow, the May 2022 collapse of Terra USD, UST, an algorithmic stablecoin that lost its peg and wiped out $60 billion in value, created intense scrutiny on all stablecoin issuers. The key difference: Terra USD was backed by nothing but algorithmic arbitrage and market psychology. Tether, by contrast, holds $186.5 billion in tangible assets against $186.5 billion in circulating USDT, with 6.3 excess on top. The gold hedge strategy, Tether's $17.4 billion gold position, is a strategic hedge against multiple risks. Dollar debasement. If the US dollar loses purchasing power through inflation, gold typically rises, preserving reserve value. Treasury risk. While 122B in Treasuries is liquid and safe, it is subject to interest rate risk and U.S. fiscal policy changes. Geopolitical insurance. Gold is universally recognized and cannot be sanctioned or frozen by any single government. Crisis liquidity. Physical gold can be sold in any major market, providing emergency liquidity if traditional financial systems freeze. By buying 2 tons per week, Tether is essentially converting USDT profits into hard assets, diversifying away from pure dollar-denominated instruments. The Treasury position. Too big to ignore, Tether's $141 billion total Treasury exposure positions them among the world's largest holders of U.S. government debt. Many small countries hold less than Tether. If Tether ever faced a crisis requiring rapid liquidation of treasuries, it could affect U.S. government borrowing costs. This too-big-to-fail dynamic ironically makes Tether more stable because regulators have an incentive to ensure it does not collapse. How 17B in gold affects your USDT card balance. If you are using a USDT-backed crypto card, here's what Tether's strengthened position means in practice. Short-term 2026 increased stability during volatility. With 6.3B excess reserves and diversified holdings, Treasuries, gold, Bitcoin, USDT is less likely to depeg during market crashes. Your crypto card spending power remains stable even when Bitcoin drops 20% in a day. Regulatory confidence. The launch of USAT, regulated U.S. stablecoin, shows Tether is proactively addressing U.S. regulatory concerns. This reduces the risk of sudden regulatory action that could freeze USDT operations. Medium term, 2027-2028, gold-backed stability premium. As Tether continues accumulating gold, potentially 12B plus annually at current pace, USDT becomes partially backed by an asset that is uncorrelated to crypto and resistant to inflation. This is unusual for a dollar stablecoin and creates a hybrid value proposition. Profit-driven excess reserves. Tether's 10BI annual profit allows them to continuously grow their safety buffer without issuing more USDT. More profit leads to a larger buffer, which builds more confidence, which drives more USDT demand. Long-term 2028 plus, potential challenges include Tether's size making them a regulatory target, 141B in treasuries, creating systemic risk if they ever need to liquidate quickly, and gold holdings introducing storage and custody risks. What to watch? USAT adoption. If it succeeds, Tether becomes too compliant to ban. Gold accumulation pace. If they hit 50B plus, they are effectively a sovereign-level gold holder. And regulatory treatment. If the U.S. embraces Tether, other countries may follow. What the new reserve mix means for Crypto.com, Nexo, and Wirex. Every USDT-backed crypto card depends on Tether's stability. Here's how this news affects specific use cases. Daily spending cards, Crypto.com, Wirex, Revolut. These cards convert USDT to fiat at checkout. Tether's strengthened reserves mean lower depeg risk. Your $100 USDT stays $100 USD even during Black Swan events. And merchant confidence. Payment processors are less likely to block USDT transactions if they trust the backing. Collateralized credit cards, Nexo. Nexo lets you borrow against USDT holdings. Tether's gold-backed reserves mean stable collateral value. Your USDT collateral does not lose value during dollar inflation. And lower liquidation risk. Excess reserves reduce the chance of USDT depegging below your collateral threshold. Cross-border spending. If you are using a crypto card internationally, USDT's Treasury plus gold backing creates currency stability. USDT tracks USD value globally, and gold hedges dollar weakness. And settlement confidence. Banks are more willing to accept USDT conversions when reserves are transparent. Alternative to consider. USDC. While Tether's reserves are now stronger, Circle's USDC remains the cleanest stablecoin. 100% cash and short-duration treasuries. No Bitcoin, no gold. Full attestation from top auditing firms and a regulatory-first approach, licensed in multiple jurisdictions. For risk-averse cardholders, USDC-backed cards, like Coinbase Card, offer maximum transparency at the cost of Tether's hybrid gold BTC upside.